2024 has to be the year that you figure out how the stock market works, because I know you guys see me on here talking about how I make 6 figures a year in passive income because I learned how to invest. And I know you've been telling yourself it's too hard to learn, but I promise if you can learn to drive a car, you can learn to invest. First things first, you need to make sure that your accounts are set up properly and you don't have too much money sitting idle in your everyday spending accounts. I see people bragging about having $10,000, $20,000, $100,000 in their checking account. And the only thing I can think when I see those is like, do you not realize that your money is just wasting away? You shouldn't have more than 4 to 6 weeks of expenses sitting in your checking account. Now, the very first account that you need to open aside from your regular checking account is going to be a high yield savings account. You can use something like EQ Bank in Canada, that's the one that I use, or you can do something like Ally Bank in the US. And you can literally make 12 times more on your savings just from putting them in that one account, and there is zero risk to this. I legit make a few $100s a month off of mine. The next account you need to open is an investing account. And now you're probably like, okay, well, like what kind of account? The biggest difference between those accounts is just the way that taxes are treated on the money that you put in and the money you take out, and what you're allowed to take the money out for. If you are making $60,000 a year or less, in Canada, your best bet is probably a TFSA account. And in the US, your best bet is probably a Roth IRA. This is because all the money you grow inside those accounts will be tax-free. If you're above $60,000 a year, like probably around 70 is when I would start considering this, you could look at doing an RRSP in Canada or a traditional IRA in the US. The difference is when you take money out of that account, it will be taxed, but you get a tax write-off today for all of the money that you put in. And because you're in a higher tax bracket, that can mean you save a lot of money on taxes. But the key to this, you don't just like take that tax refund and then go spend it, you need to reinvest it. So then technically you're using the government's tax dollars to invest, grow your wealth, and then you'll just give it to them later. It's kind of like an interest-free loan that you're using to get rich. So let's say you start maxing out a TFSA or a Roth IRA starting at 30 years old. In 2024, the max contribution for those accounts is $7,000. Doing that means that you could retire with over $1.2 million, which would give you over $48,000 a year in tax-free money. That's money you made not for working harder, but for working smarter and putting your money in the right places so it can grow while you sleep. It really does get to be that easy. If you want to learn how to build your first 6-figure bank account, I am sharing saving strategies and investing tips in my all new free training, 30 Days to 100K. Go and grab your spot right now.